Hi all, welcome to my channel. In today's video we're going to look into the next quantitative analysis. So today's stock is from the electrodes and graphite sector. So we'll get in and see which are the parameters to be looked into before buying us, and a comparison of these two stocks. So let's get started. So I will be speaking about the parameters to be checked before buying a stock. Not all parameters, but basically the main parameters to be noted before buying any stock. And we'll be comparing it with HEG and Graphite India. These are the two stocks which I've chosen today from the same sector. And make sure you all, always compare stocks from the same sector. So before getting into the parameters and the detail, we'll just see what does HEG and Graphite India do. So these two companies are the top companies in the world from India, basically, which are into the production of graphite and electrodes. So HEG was founded in the year 1972, whereas graphite was founded in the year 1962. These are one of the global players in the manufacture of graphite electrodes, and many of us know that these two shares have been drastically going down in few days here, because what happened was, we'll first see why this stock went up so high from its when you compare it with your 5-year return. In China, there were many rules passed by the China government to shut down many companies and manufacturers which was causing pollution. So steel made out of these electrodes won't give us more pollution. So at that time the demand for this went high, and the production went high, and that's the reason for the stock to grow so much. But now, since 3-4 months, the reason for the stock to go down is that in China, their own companies have started manufacturing the electrodes in a lesser cost. So there's one reason for the stock to go down, and the raw materials price have gone high. So this is another reason for the stock to go down. And the US has imposed many rules that there should be no dealings with the Iran. So most of the export was to Iran, so that has cut down. So these are the many reasons for the stock to go down a lot. And we all know in 2018 HEG had decided to buy back shares, like 13.6 lakh shares. HED had decided to buy back 13.6 lakh shares for the price of 5,500 rupees. But today's HEG price is around 1,900 to 2,000 rupees. But the HEG will buy back the share at the price which they had mentioned, which is 5,500 rupees only. Now we'll see the comparison of these stocks and see who wins, because I will be giving 2 stars for the best performer and 1 for the other. So we'll take and see who is the winner at the end. So PE, HEG's PE is 4.17, whereas the Graphite India's PE is 3. So HEG's PE is more, so I've given 2 stars there. ROCE, HEG's ROCE is 90, whereas the Graphite India's ROCE is 57. So HEG wins here. ROE, so HEG's ROE is 80, whereas the Graphite India's ROE is 44. The sales growth for 3 years for HEG is 30%, whereas for Graphite India it is 24%. The profit growth for HEG it is 210%, whereas for Graphite India it is 170. So here also HEG wins. Next is EPS. So HEG's EPS is 659, whereas Graphite India's HEG is 152. So HEG wins here, it gets 2 stars. The next parameter is promoter holding. So HEG's promoter holding is 61%, whereas Graphite India's promoter holding is 64%. So Graphite India's promoter holding is more when compared to HEG. It is only around 3%, but when comparing, Graphite India's promoter holding is more. So I've given 2 stars there. The NBFC and mutual fund investment for HEG is only 1%, whereas for Graphite India it is 5%. So I've given 2 stars to Graphite India. Foreign institutional investments for HEG it is 8%, whereas for Graphite India it is 8.32%. So 0.32% is more in Graphite India, so Graphite India gets 2 stars. Next is debt to equity. So the debt to equity in HEG is 0.16%, whereas for Graphite India it is 0.10, so it is less. There is only marginal difference, but the higher one gets the more stars here. So the total stars which HEG gets is 16 stars, and Graphite India gets 14 stars. So you all can see both the companies are a very good company. As far as I know, these two companies are equal, almost equal, so I can't choose one here because both are good. We have to look into even the returns given by these stocks before buying. The promoter holding, the mutual fund investment, foreign institution investment, and debt to equity, all these have a very marginal difference, and even the other parameters also had very marginal difference. So you all can see both these stocks are very good. By seeing the numbers, there is no much difference in the numbers. So my suggestion would be not to get in immediately after seeing the PE and the returns. Wait and then decide. February 9th is the result date for HEG. So HEG will be announcing its result on 9th of Feb, and Graphite India has not yet given its date. So wait, see the result, because there is a lot of news going on about these stocks, and the stock prices are going down a lot. So wait till the results come out, and then y'all can take a call whether to buy or not after seeing the numbers in the result. Maybe the December quarter's result might be good when compared to the Jan to March 2019 result, which would be coming in March or April. So what I would say here is not to get into the stock for now till we see the results. After that, maybe we can take a call on whether to invest or not. So if at all you want to invest, make sure you all see the numbers, do a detailed analysis, and then get into any of the stock, because both the stocks are equal here, so not a problem. So these are not stock recommendations from our side. If at all you all want to invest, as I said, please wait, let the results come, and then you all can decide on it. So as I always say, start thinking and happy investing. Thank you for watching the video, and do not forget to subscribe to my channel and hit the bell icon so that you get notified as we upload a new video. All the information provided in this channel is only for general guidance and educational purpose. Don't consider this as a recommendation from our side. Please do your own research or seek a financial advisor prior to investing. You can follow us even on Facebook and Twitter. Thank you.